We all know that real estate is a long-term investment. So what are the best performing suburbs over the last couple of decades? Well, some of them may not be the ones that first come to mind. So in today's episode of the Michael Yardney podcast, I'm going to have a chat with my business partner, Bret Warren, who's done some homework and digging into what made certain suburbs outperform over the last few decades, because it may give you some hints as to which sort of suburbs will do well moving forward. I'm also going to have a chat with an SAS commando. Now, why? This is a show about property and success and money, but most of us are being affected by a terrorist situation, a sort of hostage situation, COVID-19. And so therefore, who better to tell us how to handle a hostage situation where you've got a terrorist that you can't even see than somebody who's put his life on the line more times than he's had a hot dinner, in his own words. We're going to have an interesting chat with Mick Donaldson, an SAS officer, and also with Bret Warren. So welcome to today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted Australia's leading property investment advisor. That's the fifth time he's won a similar award in the last 7 years.
Would you like to know which suburbs are going to outperform over the next 20 years? Well, maybe a good starting point would be to understand which suburbs outperformed over the last couple of decades. Now, I know somebody who's just done this research, well, for the Brisbane property market, and even if you're not interested in investing in Brisbane at the moment, the principles we're going to be discussing are just as relevant for any other property market. So let's have a chat with my business partner, Bret Warren, National Director of Metropole. Hi, Bret.
Hi, Michael. Good to be with you.
Well, I know as part of your job looking after our clients and part of the team doing the background research, you actually spent a bit of time doing some research recently. And we know that past history isn't always a good indicator of future growth, but at least it's a starting point. Tell me about the research you recently undertook.
Yeah, look, I think it's a key part of your research. And I know Kate Forbes, our business partner, loves to analyse and put together these kinds of spreadsheets. And most of our databases can go back 25 to 30 years, Michael. So I think that's a really valuable point to start with. History is a good indicator, but I guess it's the time frame and understanding what time frame. So I've gone back 20 years, back to June 2000, and looked at the prices compared to where they are now in June 2020 and looked at some of the facts and data and numbers. Unfortunately, most investors really only go back maybe 5 or 6 years. Most of the research centres that are online and cheap and cheerful really only provide that level of detail. So it's quite common that I speak to people and their time frame, research is really only a 5-year period. And as we all know, that's probably barely even a property cycle. So 20 years is probably really good, 2, 3, maybe even 4 cycles of property to really judge from.
Well, I know for some of our data, and that's available, we go back 40 years. There's some states that only go back 30 years. So we have it by suburb, and we also have it by houses or apartments per suburb. But it's important to understand how the suburbs have changed, because if you just look at the data, the raw data, and not understand that over that time it may have gentrified, there may have been new infrastructure, or maybe 30 years ago it was raw land and today it's houses. And so you're actually looking at a different type of property. Median prices on their own aren't a very good indication. In fact, it's one of the last indications we use to understand what's happening, Bret.
Look, I completely agree. And the other good indicator is obviously if we can go back that far and the suburb actually existed, that's probably a win within itself, because if it's a suburb that's only popped up in the 5 years, that data is not as reliable and as predictable as it has been over a 25 or 30-year period.
So it's important to know what a particular property or a type of property has done over that period of time. And with established suburbs in our inner and middle ring suburbs of our capital city, those properties have been there generally for much longer than 30 or 40 years. On the other hand, with the new and off the plan properties, you know what they sold for 3 years ago, 2 years ago. I was going to say we don't know what they're going to sell for in a few years' time. Unfortunately, I think we do. It's going to be less than the people paid for it. So the data is a good starting point. So when you looked at the Brisbane suburbs, and on the whole, most people will think Brisbane's been a bit of a laggard. What did you find? What sort of levels of capital growth did you find?
Well, look, it was quite incredible, Michael. Obviously, we're talking about houses here, but for the last 20 years, some suburbs in particular have performed more than 400% over a 20-year period, which was really quite surprising.
Well, it was, wasn't it? But I guess that's how averages are made. So if overall the Brisbane market did just under 8% per annum, there are some suburbs that did much better and others that didn't. So what did the top performing suburbs have in common, Brett?
Well, I think that's getting to the purpose of why we're putting these reports together, Michael, because it's one thing to understand that these suburbs and how they've performed, but it's another thing to understand why. And I think that's the thing and the trend that we can kind of pick up. So I've picked out my top four, Michael. The first thing is 80% of these suburbs are within 10 kilometres of the Brisbane CBD with all the major employment hubs. So you've got the bigger hospitals, the bigger CBD and business district. You've also got the airport. So there's always going to be outliers and little bits and pieces, but the majority of percentages are located within 10 kilometres with these suburbs.
That's interesting. Now, interestingly, over that period of time, a number of those inner ring suburbs that were industrial suburbs have gentrified, haven't they?
They certainly have. As you pointed out, there's a number of areas that may have been frowned upon, 15, 25 years ago, but they're obviously coming in, gentrifying the area, getting a new breath of fresh air. There may be some infrastructure coming in or certain projects along the way. So again, that's another level we dig down into more of a macro level also, or micro level, my apologies.
So gentrification is the process where an older suburb, the houses there get past the use-by date, the people move out, young families move in, and they buy up the old places and renovate them. Developers come in and buy old places, pull them down and build new developments. And while that has happened in the inner suburbs of Sydney first, then Melbourne, and now Brisbane to a degree, it's not too late because that's happening now in many of the middle ring suburbs where the land has become so valuable that older houses are being pulled down and duplexes or townhouses are being built. And gentrification goes on over a number of decades. So it's not a bad way of trying to find an area that's going to outperform the averages. How do you find them? Drive down the streets and see what's happening. Go past the shops and see the old shops now being replaced by those fancy delis or the cafe shops that sell the nice lattes. Now, in Brisbane, you're a little bit late to the party compared to Melbourne and Sydney, but boy, did some of the suburbs gentrify and change, and you actually have good lattes in Brisbane now, Brett.
We do. It's interesting you say that, Michael. As a buyer's agent working on the ground, I used to get really excited if I turned into a street and there was 2 or 3 new builds, there was a place under construction, someone was renovating, there was that physical, you could really see the landscape of the street changing, and I knew straight away we're in a really, really good location for gentrification. So it's well said, yeah.
You can also see the sort of cars that are there. There'd be SUVs now. In the old days, it used to be BMWs. And I remember reading a blog a while ago that actually said you can tell a gentrifying suburb by its dogs. So the sort of people that, sort of young couples who have dogs now tend to have those sort of shorter, smaller bull terrier sort of trendy dogs. Yeah. So I don't want to go down the wrong path at the moment, and I'm not suggesting you choose a suburb because of the sort of dogs you see in the dog park. But it is a way of the way people live nowadays, isn't it?
It certainly is. Maybe that's a topic for another blog, Michael.
Sure. So, okay, one thing is most of these were located close to the CBD, and one element of it was because that's where employment is. That's also where people with higher incomes want to live, close to their employment, close to the amenities. Another is that they have then changed. They've had the money to be able to change and gentrify those areas. What about infrastructure?
Yeah, certainly. And it's really good, dug a little bit deeper. Again, a larger number, 80% of these suburbs do have a train line. I did look at some really good statistics in Brisbane. If you're buying within 10 to 15 kilometres of the CBD in Brisbane, you've got an 87% chance of having some kind of public transport. Whereas if you're buying outside of that 10 to 15, it drops to about 20%. So it's quite substantial. And I would argue, Michael, as you mentioned before, Brisbane's a little bit late to the party in a number of ways, but we learned a lot from Sydney and Melbourne, and our roads are only going to get busier. We've had tunnels that have really absorbed some of that traffic, but moving forward, our roads are going to get busier. So I only see a trend of a really, really good train line or a new bus line that's being established as becoming more and more important.
Well, as we said right at the beginning, this isn't just for Brisbane, it's for all the big cities around the world. And so it's been shown that all around the world, if you're close to public transport or if you're walkable within that suburb. So first of all, you've got to find the good suburb, but then you want to be close to the right amenities, but not right on them. So you don't want to hear the train rattling your windows, but you want to be able to walk to it, or in some suburbs, drive to it. The other thing is schools. That's become very important in Australia in particular, hasn't it?
Yeah, certainly next on the list, and a large number of these suburbs have the school catchments, which are hugely desirable, particularly if you're in the catchment, you don't have to pay a school fee or a larger fees to get into those schools. I know it's quite interesting. There's a suburb called Ascot that has a outstanding school catchment. It's mentioned in the paper every year, and it draws a huge amount of attention. A property was actually subdivided, and would you believe, Michael, one property after it was subdivided was in the Ascot school catchment, and the other property was in the Hamilton school catchment. We're talking about obviously $1 million properties. It sold for $100,000 more just because it's in the school catchment. So I'm not suggesting all suburbs will be like that, but certainly people are prepared to pay a premium, and that's why a number of these outperforming suburbs did have a highly desirable school catchment.
Interestingly, another trend that we have found in those areas are that people have got higher disposable income. And recently, the tax department statistics have shown that wages growth has been very low. And I think moving forward, it's going to remain low. But some people's wages are still going up, aren't they, Bret?
Yes, look, absolutely they are. These are generally professionals with higher paying jobs. They may receive bonuses or commissions. They may have additional income from side businesses or other businesses. They may be investors like us, Michael. They may have receiving income from property or shares or equities and things like that. So they don't just have a single stream of income. They have multiple streams that will continue to grow. And I think it's a really important time for Brisbane at the moment, because I really see this as a time where we may get that separation of people's wages growing with multiple income streams, while people who are living paycheck to paycheck, unfortunately, as we talked about, with wages not growing, it's going to be challenging in the next 4 or 5 years.
Well, not only Brisbane, unfortunately, the hangover from the pandemic, the recession we're in, is going to dampen wages growth. There's going to be spare capacity in a lot of industries. Some jobs won't come back again. So you're right. We've said a few times we're in the same ocean, but we're not in the same boat. Some people are hanging on to driftwood, and other people are actually, motor crews are doing quite nicely at the moment. One of the things you wrote, because you wrote a blog about this, and this has got me to actually have a chat with you about it, and you did a video. No, you talked about this concept of an investment horizon. Maybe you could explain a bit about that.
Yeah, so obviously as part of our strategy and our plan, when we put a plan together, we want to understand the investment horizon of an investor. So most people who come to us are talking about a property or the next property, when in fact we should be looking at their time horizon. It could be 10 or 20 years until retirement. So it's really important to understand that. And that's exactly why we go back over the same period of time to understand how markets have performed. A lot of investors are very short-term focused and things like that. So we really want to get that understanding of where they'd like to be, the time frame, and then invest accordingly. Most people focus on that 15 or 20-year period, when in fact they may have young kids. They may want to leave a legacy and properties to their kids to give them a leg up or have a better lifestyle. So there's more about that generational wealth and concept we've spoken about before. So it's really about using that in your investment making decision and getting the time in the market. We always talk about timing the market, but we all understand that it's more important to have that time in the market. That's a great case in point with some of the numbers we're seeing here over a 20-year period.
Well, they were significant property growth statistics that you've come up with, but it doesn't surprise me, because I know when we annually review our clients at Metropole and we do the performance review of their properties, they've actually done very nicely. We're talking about houses in Brisbane. Apartments haven't done as well, but we don't want to get average returns. And not just in Brisbane, because I know you and your team invest in Melbourne and Sydney as well. We just want to do above average returns. We want to outperform the markets. And that's not hard if you know what to do in property. By the way, I can't do that in the share market. So how can an average investor outperform the markets, Brett?
Sure. Well, in my blog there, Michael, I've made two suggestions. And this comes from a level of perspective as well. So I guess if everyone understood where they live at the moment, they all know there's a really good part of the suburb and there's maybe an average part of the suburb. So we want to try and find the best performing suburbs like we have, but then find the best pockets, the best streets within those suburbs. Maybe there's a view of the city, or maybe there's a school catchment we're creeping into. Just better streets, more elevated. That's the first thing, getting the right street within the right location. And then the second thing is, we've talked about it on multiple occasions, is having the opportunity to add value to your property. If you are, buying brand new in some cases or off the plan, you're probably missing a bit of a trick, because wages growth and inflation and probably property growth is going to be a little bit subdued in the next, 4 or 5 years. So if you've got the ability to even do something as simple as a cosmetic upgrade or something more substantial that we do with our clients with a development, it's really going to fast track and make up for a lot of the slow growth in the next 4 or 5 years.
You make a couple of good points there. So the worst position in a good suburb isn't necessarily the right place to invest. So even if it is the right suburb, the wrong location within that, the wrong side of the street or on main roads doesn't work. So you said a couple of times that, and I agree, that we're not going to get as much capital growth moving forward. Over the last couple of decades, property values have increased for a number of reasons. We've had the supply and demand working in our favour with very strong population growth. We've had interest rates drop considerably, which means people with the same amount of income could borrow more and allow them to push up the value of properties. And this helped a lot of young people into the property market. We had banks being pretty friendly, lending to anyone who could come into the front door. But I think we're going to have a different market moving forward. What do you think is going to drive property values moving forward?
Well, sorry to sound like a broken record, Michael, but it's the same fundamentals that have probably driven them for the last 20 to 30 years. I guess if we go back, and Brisbane's a great example, although we're talking about Brisbane, Sydney and Melbourne in particular, because we've learnt those lessons. Brisbane hasn't had a lot of growth in the last decade, really because we haven't been creating enough jobs. So we always hear that Brisbane's very affordable, or Brisbane's a great place to live because of the weather. But if you can't get a job, you're a bit reluctant to kind of move. So now we're producing jobs are coming in. If people are taking up those jobs, they want to generally live with quite close to their employment hubs and, getting towards the major employment hubs. I know in Brisbane, there's 50,000 plus jobs being created between the CBD and the airport. So once they get into those locations, they want good infrastructure, they want good public transport. Most people may be a bit younger and may have a younger family because they're more willing to move, and they're looking for a good school catchment and somewhere to raise their kids as well. And then the final point I add, again, Michael, getting back to it, is the income and the wages growth. And we talk about affordability, but it's not obviously what people think about being able to afford something. It's getting back to what we spoke about before and having those multiple streams of income so people can afford to pay more for property, they can afford to overcapitalise and build new properties and things like that.
Really interesting. Just before we had our chat, I answered a comment that somebody had left online on Property Update. And this is a nice guy who's just starting out in property, and he's got a really small deposit and he wants to know what he can do. And the answer is nothing. Sometimes the right thing to do is nothing. So to buy a good, well-located property, to buy an investment-grade property or a good home, unfortunately does take some capital. So it's going to continue to be that way, and it's very likely moving forward the gap between the haves and have-nots financially is going to increase, and that's only going to continue the trend that has happened. Well, I was going to say forever, but it hasn't, because many, many years ago, in fact, when we lived off the sheep's back, properties in regional Australia were just as valuable, and there were some amazing mansions there. And then when we became an industrial nation and people moved back into the cities, the way we lived changed. And I guess the way we're living is going to change again now. So it's important to understand those properties that are going to be in strong demand in the future, which you just told me, and they're the ones that are going to outperform in the long term. But it's really interesting just looking back at the Brisbane example. Despite economic crashes, despite the floods that you had,
Floods, the mining
despite all the
downturns.
headwinds, the mining town issues, you're right, it actually has, if you bought the right property, properties have performed pretty nicely. It all goes back to, in some ways, supply and demand and owning the right properties. Now, if you've listened to this and it actually rings true to you and you'd like to get somebody with a national perspective, a holistic view, not just trying to sell you something in their backyard, because even though Bret talked about Brisbane, Bret, I know you as a national director of our company direct your clients to what's most appropriate for them and their budgets and what their risk profile is and where they already have got properties.
Look, certainly. Obviously, Michael, there's a level of instinct with what we do, but I don't decide until I've seen the facts, the data, and the numbers. I'm a bit of a property nerd, and I always believe the numbers never lie, and they tell the story. So whatever the numbers are going to tell us, we're obviously working in our clients' best interest. And if they've already been having a number of assets in Brisbane, it doesn't make sense to buy more.
Well, I think the other thing is we don't sell properties. And so because we don't sell properties and we have our own team in the biggest capital cities in Australia, Melbourne, Sydney and Brisbane, you can trust the team at Metropole to provide you with direction, to give you guidance, to get you the sort of results that you just talked about, Bret. And we know that because we've got a track record having bought over $3.5 billion worth of assets for clients. And our property management divisions are looking after over $2 billion worth of assets for clients. So we know what works, what doesn't work. So if you're interested in getting into property, or maybe just having a health check on your current property portfolio to see if it's going to get you to where you want to go, why not have a chat with the multi-award winning team at Metropole, Bret and my team? And Bret, even though he's busy as a national director, would still be happy to see you personally, to talk to you. So go to metropole.com.au, find out a bit more about what we do and leave your details, and let's see if we could help you. It may be strategic property advice you need. You may want to use our buyer's agency, wealth advisory, financial planning, property management, renovations, development. I don't know what your needs are, but I do know now is a really good time to get all your ducks in a row, because the property markets in certain parts of Australia are moving and others are going to, as we move through the challenges the world is offering us. Metropole.com.au or 1300 Metropole. Bret, always fun talking with you. Thank you so much.
Thanks again for your time, Michael.
Life can be a whirlwind. Modern day life isn't for the faint-hearted. It's busy, it's stressful, sometimes lonely. We tend to settle in our routines, we chase our dreams, and then came 2020. If you were told in January what April would have been like, you wouldn't have believed it. If you were told in April that we'd still be restricted by COVID today, you wouldn't have believed it either. Now, I've heard some people suggest it's a bit like a terrorist attack or a hostage situation, where we're being held hostage by a villain that we can't even see, that penetrates our borders, that came into our backyard. So today, I thought I'd have a chat with somebody who knows how to handle terrorist attacks, who knows how to handle hostage situations. And that's my guest today, Mick Donaldson. Mick's had a distinguished military background, having served multiple decades in Australia's regular army, the Army Reserve, as well as service in the British Army. But he's also been in the British and Australian SAS. So who better to talk to about a hostage or terrorist situation than a SAS trooper? Welcome, Mick.
Thank you. What an introduction.
Yeah, now you've got a lot to live up to, haven't you?
It's all mine to mess up from here, yes.
Okay. Well, Mick, you won't, because we've gotten to know each other a bit. You've helped our team, and we can talk a bit about that later on. But what I thought I'd do is maybe get a little bit of background about you before we talk about what many of us are experiencing at the moment and how your background can help us get through some of these challenges. So tell us a little bit about you and how you ended up getting into the military forces.
Okay, so snapshot of me, 30 years in Special Forces in both the British and Australian armies, majority of which was in the Australian Army. And by Special Forces, I'm talking about Special Air Service regiments, the SAS, pretty well-known global brand. Joined the Army while I was still at school, joined the Army Reserve. I had a number of regular Army instructors at my Army Reserve unit, all of which were Vietnam veterans who very much shaped my early thinking. So I'm one of the few people in the world that have successfully passed both the British and the Australian SAS selection courses.
So you've obviously seen some hairy situations where your life was at risk and other people's life was at risk. How has COVID affected you? Because now you're a businessman.
Yes, reinvented myself. That's an ongoing process. But yeah, absolutely. Had more near-death experiences than I've had hot dinners. That's a slight over exaggeration. So you were talking earlier that it's like a terrorist attack or a hostage situation is the analogy I've come up with. That initial stage is that shock of capture. That's that psychological effect of something unknown happening and where you lose all control. You don't know how long it's going to go for you personally, and those around you are put under mortal danger. So that's where the similarities are. It might surprise people to know that I had that same psychological effect at the start. I guess because of my what we call stress inoculation, exposure to those sorts of situations, I was able to regain my mental and emotional faculties a lot quicker. So the period that I spent in that shock of capture was much shorter than most people. So it affected me, which is saying something, I guess. But, it's about how you respond to those situations. That's the critical element. And I guess that's sort of what we can discuss in greater detail.
Sure. Well, we've all experienced it in different ways. So I've heard people say we're in the same boat. No, we're not. Different states are in different situations. So we're in the same ocean, but we're in different boats. And everybody is being tested in one way or another at the moment. So they're going through different levels of psychological trauma. Those in Victoria, they're being held up by the terrorist, than those in other states. So what are the stages one goes through when you get a shock like this, Mick?
So as I said, what you talked about, we're all in the same boat. We're not in the same boat, as you said. I think some people aren't even in boats. They're probably clinging to a bit of driftwood or trying to do a bit of dog paddle. So the experiences are significantly different. And some people have actually, through no fault of their own, through opportunity, have done quite well out of this. Some people have been, the effect on their lives has been pretty minimal, but for the vast majority, it's been pretty catastrophic. So there is that initial psychological effect, and it's being able to get over that. And the way I did it was, well, first of all, I realised that this is my world, comfortable in chaos. Chaos, uncertainty, fear is the world that the Special Air Service, the SAS, operate in. We may contribute to that chaos occasionally by design. So I just went back to those basic tenets that I knew and started to plan my way out of it. And that's your first thing was, there's a great mentor I've got. He's a legend in the Australian Regiment. He always talks about the survival situation where the first thing you do is sit down and make a cup of tea, because that's a simple process, a process that you know well. It slows your thought process down. It allows you to cognate, regain control of your emotions and your mental processes. And at the end of it, you've got a nice cup of tea.
So I guess what you've got to understand is slow down, don't get too involved too quickly and jump in and make an emotional reaction, and understand there are some things you actually can control. And one of them is the way you're thinking. And while the media continuously gives us messages, negative messages in some ways, because I think we've learned over the years their job isn't to educate us, it's in some ways to entertain us or to get clicks on their websites. I think it's important to get some useful beliefs out of this. So rather than positive thinking, which is hard at this time, what useful ideas can you come up with? What useful things can you think about? What are there still some things you can do? And there's always options, isn't there, Mick?
Absolutely. I've got a saying that you're never out of the fight. As long as you've still got a pulse, you're still breathing and you're still conscious, there's always a chance of success. So very much take that in. And survival is a decision. So you make that decision that you're gonna do whatever it takes to get through this. And we are in a survival situation, I believe, and probably will be for some time to come. So you control what you can control. And at the start of this, that was very limited. So you can control your mental well-being to a degree. You can control your physical well-being to a degree, do some exercise, do something that's remain active, both mentally and physically, releases endorphins, you feel better about yourself. And then you start that planning process. And part of that, the first stage of that planning process is understanding the enemy, COVID, and the what we call the second and third order effects. Not knowing how long this is going to last for. So that's another reason why it's like a hostage situation. You don't know when when it's going to end. And there's only three outcomes in a hostage situation. That is, you get negotiated release, sort of been through a bit of that. There is a rescue attempt, or you die. And again, those similarities are a bit uncanny.
Aren't they? So let's leave the third option out because we're not going to die. So therefore, which of the other options are there for us?
The situation is at the moment that we don't have a great deal of control over the release as far as negotiation goes, because the government really has that, particularly when we're talking about lockdowns and, particularly for yourself, Michael, in Victoria. And, my heart goes out to all the Victorians. Being in stage 4, never did anyone think we were ever going to get to that stage, I don't think. And we sort of all came out of it. And so that was that failed release rescue attempt, just to be plunged back into it. And there have been increased restrictions across all states. Luckily I'm in a place that's faring much better to where you are.
So Mick, people think about their situation differently depending upon what's happening around them and where they are in the journey in COVID.
Yeah, absolutely. Look, it comes back to that statement I made. You can control what you can control, and everything else outside of that, you try not to worry about too much. And that is, you control your physical condition, your immediate surroundings, you control your emotions, you get into a good routine. Routine helps. It helps that calming everything down, helps that being in control of what you can control, because no one likes losing control. Humans love maintaining that control. Track time. So at the end of it, this is survival. As I said, survival is a decision. So at the end of each day, put a cross through the calendar, or a tick in the book, or if you journal, do that. That's another day you have survived. It really is a milestone. So we're chunking those milestones down into almost hourly, daily, weekly, and monthly. And if you're still at the end of the month, then that's a success.
Now, that's really interesting because I've been in sort of lockdown in Melbourne since March, working from home, and I've actually had more of a routine in my life now than I've had in my normal days before. And I hadn't thought about it that way, but I've actually coped very nicely. And interestingly, I do have a routine. Even at 10 o'clock, I actually have a particular coffee. I've actually had much more organised day, including every 5 o'clock in the afternoon, I go out and I go for a walk along the beach, which is just down the road. By having a routine, Mick, I know what's coming next. I know what's in my day, and I feel I've got a level of control.
Absolutely. And that's the building block of it. And from that, as I said, you track time, you maintain that agility. And I'm talking about mental agility, physical agility. So this transposes into the business world. When you've got those opportunities, whether it's a little bit more freedom to be able to go down to the corner cafe or to go to a restaurant or whatever it is, you take those opportunities. The other thing is you work the system. If you're allowed to go shopping for essentials, what I did in the early stage was push those essentials out so that I could actually get out, because you become like a caged tiger. You get cabin fever. The other thing that I think is really critical is you need to be prepared for disappointments, because they are going to happen. They have happened, and they're going to continue to happen. So you need to be prepared for that, because that lessens the shock effect. It will still have some degree of shock, an effect on you mentally and emotionally, but you need to prepare yourself for that. That's critical.
Now, you've got an acronym, PEARL, to help us get through this. Would you like to talk us through that?
Absolutely, PEARL. So this is something I came up with, and I think these are the basic tenets, the traits, the critical traits that we need to, as individuals and organisations, focus on. So PEARL, PEARL, I think I got that right. The P stands for perseverance, and that is knowing that this is a long journey, being in it for the long haul, and being able to mentally set yourself up for that long journey. This is a marathon, not a sprint. You need to mentally prepare yourself for that and do what you can to make sure that you've got the resources and the endurance to get through that. The E is equanimity. We could hold a competition to see what that means.
That's a big word.
It is a big word.
I'm almost 68 and I have never used that word in my life. That's very impressive. What does it mean?
I didn't come up with it. My partner in business and life came up with that. She's got the family brain. So equanimity means calmness under pressure. And again, from an individual perspective, if you don't maintain that level of calmness, then fear and uncertainty will take hold. Panic will set in, and that's infectious, whether it be in the family situation or in a business situation. And particularly if you're in a position of responsibility, i.e. a parent or a manager or whatever, remaining calm, even noting that at times you are not going to be, but outwardly you need to control that. And if you can't, you need to run outside and scream, do whatever you do it, get over yourself, get back in there and continue the fight. So that's the E. The A we've already touched on is it stands for agility. And again, I come back to that's mental agility and physical agility. And that's that ability to, people talk about you need to pivot now. I don't think you do, whether it's personal or business life. I think the agility, that ability to change tack quickly to take advantage of fleeting opportunities and the changing situation, which is, we've seen how quickly that can change. R is for resilience. That's different to perseverance. I'm a big believer that everyone's got a well of resilience. That's at different depths depending on the individual. It drains at different times, but being able to weather the storm and being able to recognize the signs when you're running out of that well of resilience and when it needs a top up, and knowing what actually helps you top that well of resilience up is essential, because then you can jump in there with the first aid and avert sort of bottoming out there. And the last one is leadership. Now that, I'm a big believer that leaders exist at all levels, and whether it be individual, personal leadership or leadership in a collective sense. And it sort of underpins success, or it doesn't sort of, it does underpin success. So lead by example, whether it be in the family, community or business arenas, set the standard, maintain that standard, and you will lift others up to that level.
Sure, I think that's important. So even if you don't have employees, the model that you give, the example you give, the role model you are for your kids is going to be very important at this sort of time, because they can sense it even if you don't say anything.
That's right. Yeah, absolutely. And you know what? They'll learn that and they'll take that into their adulthood.
Sure, because you're their role model and the apple doesn't fall far from the tree. We will get through this. I think one of the lessons I've learned over the last couple of months is it's going to take longer than I expected, longer than we'd all hoped. But there is an end in sight and life will go on. I'm old enough to have lived through not a worldwide pandemic like this, but there have been others. There was AIDS, where we thought that the world was going to come to an end and we learned to live with it, even though there wasn't a vaccine. There's mosquitoes and it's not malaria, but I've learned if I go to a malaria area, I take my tablets, I wear the right clothes, I put the right sprays on. So we will learn to move on and live with this. And we're very lucky in Australia that we're, I guess, in the best place in the world to move on with life. Is there a final message you'd like to leave our listeners, Mick?
I'll just go back to what you said there. Learning to live with it is the key here, because this is going to be with us for a very, very long time. And holding up a vaccine as the holy grail might not, prepare yourself for disappointment there again. And again, taking those precautions, those logical precautions, will increase your chances of survival. And you're right, we won the lottery of life by being born in this great country. There are a few places on the planet that I'd rather be right now under these circumstances. I come back to that saying that I sort of live and die by, and that is, you're never out of the fight. As long as you have a pulse, as long as you've got breath, as long as you're conscious, there is still a chance of success. So never, ever, ever give up.
That's a good point. How many times have we heard it's the end of the world as we know it?
Yeah.
How often has that needed to arrive before we realise it's not the end of the world as we know it? Having heard that often enough, I recognise that. Now, Mick, maybe we should just have a quick talk about business as well, because you've now used your experience to help business people, and I know you helped our Queensland team, and you set up HQ Tag. What was the purpose behind that?
So its genesis is back in my days with the Special Forces. We used to sit around and talk about how cool it would be to do exciting things and let other people have a bit of a snapshot into our lives, but also, and primarily in this circumstance, this situation, is to distill all those things that the SAS do really, really well, because, we do the seemingly impossible in a resource-constrained environment in very, very small numbers, always outnumbered, always outgunned, in someone else's backyard without an invitation. And we usually pull these things off. So there's something in that. What we do is distill that down and map it across to whatever environment. In this case, with your team, it was the workplace, and it's been very, very successful.
Well, I know that our Queensland team, who had the opportunity of doing this with you not that long ago, got great benefit from the lessons they learned from it and the camaraderie they built from it. So if people want to find out a bit more about the experiences you offer, where should they go and have a look?
So they can go onto the website, www.hqtag.com. So that's hqtag.com. Or they can drop us an email on intel@hqtag.com. So that's INTEL. And we've actually got a special offer. So we're running a series of 2 webinars in the next few weeks. If they drop us an email and mention your name and COVID in the title, we'll give them a 20% discount on that.
Well, we'll leave a link in the show notes all about that. Thank you, Mick. And
Pleasure.
If ever I have a hostage or a terrorist situation, I now know who to call.
Pretty cool. Ghostbusters, yeah.
That's right. Thanks.
Okay, no worries.
Well, 2 extreme contrasts in today's show, a chat with Bret Warren and with Mick Donaldson, and I hope you got some benefit from both those segments. And if you did, why not tell somebody else who you think would benefit from it? Just spread the word about the Michael Yardney podcast so that we can make more people financially secure, financially literate, and get on with life. If you did appreciate it, why not leave a review on iTunes or Stitcher or Spotify, wherever you listen to this? Tell the world about it as well. In between the twice weekly Michael Yardney podcast, you can catch me on social media. Just look for Michael Yardney. Otherwise, I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?